We had gold going all the way back down to $1,240 today, currently trading around $1,247 an ounce. We have seen equities pick up over the past couple of days, but not really convincing. Why are we seeing gold pulling back so quickly, though?
Yeah, there's actually a couple of factors at play at the moment. First of all, I think it's more technical nature that we're seeing in the market. There's a lot of options written on the gold price, and the guys are playing the range in gold. So that is really technical, but more on a fundamental perspective or a fundamental view. We are currently seeing very, very good demand from especially India and some Asian countries. As you might be aware that from now on for the next 8 weeks, we are having wedding season in India, and typically gold demand is very strong, and we are seeing them buying the dips on gold.
Well, Chris, we of course at the beginning of the week had that European bank problem hanging over the markets again with that article in the Wall Street Journal. So naturally you would expect gold to pick up due to that. It went up to above $1,260 an ounce. But everything's not normal towards the end of the week, so we still have that European banks crisis hanging over the markets. We have equities picking up a little bit because we had some good news out of the US economy, enough to push gold all the way back down.
Yeah, I think somehow the various holidays have also subdued interest in the market. As far as I'm, and I think Walter's quite correct in the sense that there is some play around the options and of a technical nature, but you've got a stream here where the supply and demand is still in balance. There's no balance there, and that stream will take us to new highs. And my suspicion is that we could see it as early as next week as it starts to push higher. The fundamentals for gold is quite strong, especially when you start seeing. And my suspicion is as we go through towards the midterm elections in the US, there are going to be questions asked about both the euro and the dollar, and further investment demand coming through for the precious metal.
Well, Walter, what's your view on that? Do you think we could see gold testing new highs again next week? Of course, we also had news out yesterday that the IMF has sold 10 tons of gold to Bangladesh. But of course, this is part of the program that the IMF announced last year. So you wouldn't expect that to have any material impact on the gold price?
Well, first of all, I agree with Chris. We see the gold price heading higher. Whether it will reach new highs next week, possibly, but definitely we see it higher towards the fourth quarter. And we target 1,300 as the initial target, and gold does trade very technical and will probably overshoot that too. The real interest rates are very low at this stage, especially in the US, and that we see as the key driver of gold investment demand, at least. Yeah, and I mean on top of that, then also of course there's the central bank buying. 10 tons of buying by a central bank is not a lot in the bigger scheme of things. But I think it's more about the signal it sends that central banks are buying gold again and they're not selling, and especially it's emerging market banks that's buying gold. And we know that it is emerging markets also that sit with the bigger portion of foreign reserves. So certainly that is a positive signal.
Now, Chris, we're getting Chinese inflation data out this weekend, and there is a concern that it could be starting to show signs of acceleration, which could lead to higher interest rates, which could impact on the Chinese property market. What's your view on that, and what would that do to commodity prices, such as copper, which is used, of course, in housing?
Copper is probably most at risk when it comes to the China marginal demand, because if that bubble does come off, it's quite a lot to digest. The difference though about a Chinese property bubble is that there may well be 65 million unoccupied units that sort of flooded onto the market. In China's case, with urbanization, population growth, etc., that will be absorbed within the next few years. It's not like overbuilding in Japan or Germany or something like that, where those units are there, the surplus will be there for a very long time because of the population dynamics that you've got in those countries. So, but still, it could provide a lean period for copper for quite a few years if China does pull back. Clearly, they have to deal with the rate of urbanization, but the inflation and the bursting of the property bubble in China, plus the bursting of their stock market bubble, doesn't make it clear that the yuan actually will appreciate over the next 2 or 3 years. You may actually see depreciation and a lot of problems on the trade front in terms of trade relations.
Walter, do you have any concerns about Chinese support for base metals like copper and aluminium? Do you think that...
Yeah, I mean, we are obviously looking at it. We do have some concern, but you know, if we look at something like copper, of all the base metals, it is the tightest market, and we think the market will be in a deficit next year, and possibly for a couple of years after that. There's just not the projects coming online to match demand. If there's a big fallback in China in terms of the housing market, we might see copper a bit lower, but we think that's only going to be temporary. So in general, we are actually still bullish on copper despite the developments in China. You know, also what we see on the ground, we see, for example, spot premiums remain very high levels, which indicate that despite the rally in copper from 6,500 to 7,500 where it's now, demand is still strong. So yeah, I mean, I agree with Chris. You've got to keep an eye on it. But right now, we don't think that is a major risk to the 6-12 month view for copper.
Of course, you're really looking at commodities there that have supply constraints providing an underpin to them in that case.
Could you just repeat that?
So you're really looking at supply constraints providing an underpin to the copper price here.
Yes, for copper, it's not the same for all the base metals, but certainly copper we think is one of those metals where if you take a 12 to 24 month view, certainly supply constraints are definitely something the guys are looking at, investors are looking at, and certainly the consumers are looking at too.
Well, Walter, perhaps sticking with China, and of course we have the Chinese government still trying to stimulate the auto sector there. We had car sales numbers out last week, which looked pretty good, and this must be good for platinum. Platinum's outlook going forward.
Yeah, absolutely. You know, China is definitely carrying the platinum market to a large degree. You know, but it's not so much through the auto sector. If you look at how much platinum is being used in China and their vehicles, it is still a fairly small proportion relative to, for example, Europe. But I mean, nevertheless, the fact that they are selling many vehicles are helping. But where it is really assisting platinum is via jewelry demand. China is by far the biggest jewelry market for platinum, and we have seen very, very good demand from China over the past couple of weeks. So yeah, China is definitely supporting the platinum price.
And of course, at the same time, we have South Africa obviously as the biggest platinum producer, Chris, and we have strikes at Northern Platinum at this stage. And of course, I know it is one of our smaller platinum companies, but still it's losing 1,000 ounces of PGM output a day. And this strike looks like there's no end in sight at this stage. No,
exactly. It will eventually end when people have to, you know, get back and earn some, you know, some income. But at the end of the day, platinum is the supply of platinum is a function of what happens in South Africa, and there's marginal activity outside, but the bulk comes from South Africa and from a small handful of major producers, and that means that one can at least, in a sense, manage the price, if I could say it like that.
Well, Walter, any concern about that strike at Northern Platinum? As I said, it's 1,000 ounces of PGM output a day. I don't know how that sits with the rest of the South African producers. Is there concern there in the market that this strike is now entering its second week from Monday?
Yeah, the strikes are always a concern in the market, certainly from an international perspective, and as you guys rightly point out, simply because of the geographic nature of platinum supply. You know, at this stage, 1,000 ounces a day or a week is not a major problem. There is a lot of platinum floating around, so certainly I don't think that's going to be something that see platinum rally much higher. Of course, if we see more strikes or this extended period of time, then it might start impacting. But at this stage, it's not a major issue.